Hello and welcome to Long Investor. So today we're revisiting the MULN stock, ticker symbol MULN. I have talked about this stock back in March 27th, and I was saying there are people saying there's a cup and handle pattern forming on social media such as Reddit and Twitter. So back then we looked at some of the data, the technical picture, and in a conclusion, I was saying that it does not look like a good cup and handle pattern to me. And now saying only to get in if you manage to get in near the gap, which is between $1.8 to $2. So as you can see, since March 28th, it did not have a breakout and it is going into a consolidation zone. And if we are looking at it in our chart on pre-market on March 28th, it did go to as low as $2, so it did touch the gap by a little bit. So if you're not too greedy and if you're going in $2 in just 2 days, it got as high as $3.5. So since we're here right now, so let's talk about this. And as disclaimer, I do not hold any MULN stock at the moment. As mentioned, MULN is in a consolidation range, so it is a pattern before a breakout, and a breakout can either go up or down. So even though, let's say there's something called the bull flag for identifying a consolidation range, it does not always go up. So let's say it does go up. The target price would be the height of the flag adding on top of it. So now I've identified the bottom around here. And as for the height, let's use the one above the candle closing price. So if you add this to the candle, then the target price would be around $5.3. And if you zoom out by a little bit, we can see there's a few support line in here, which is now becoming the resistance at around $5. So if it does break out, it's safer to say maybe you hit $5 or even filling the gap in here, maybe somewhere around 4.7. So 4.7 to $5 would be a safe assumption for a target price. And if it does go down, the gap between 1.8 to $2, it still hasn't been filled yet. So we might see some support around $1.8 to have a little rebound. And the rebound will possibly be back to the $2.1 range, which is the current support line. So first, let's take a little bit of the technical. So the RSI and the price does not really show a divergence. Instead, it shows weakness of momentums, and as it is getting lower. And if you add on the Bollinger Band, it is at a oversold level at the moment. The MACD is the only one that shows a slight divergence in the momentum and the price. And as for the volume, every time when it spikes up, there's a big green candle with a huge volume. So people are buying in when it's going up, and there aren't that many people selling as it is coming down, so which is a good sign. So on technical picture, there's a mixed signal of the momentum and with the people's behavior. So it's hard to determine based on the technical picture alone. So right now, let's take a look at the macro. So MULN is listed on NASDAQ, so it somewhat follow the whole NASDAQ movement and the sentiment based on the NASDAQ price. So if you're putting the NASDAQ on top, it doesn't correspond day to day in 100% relation, but it does correspond the overall big picture of going up and down. As you can see, we're NASDAQ bottom and we have a recent big rally up. MULN price is going up also, and then NASDAQ is coming down by a little bit, and we can see MULN right now is in a consolidation zone. So let's dive into NASDAQ and the tech sector by a little bit. So this whole week, NASDAQ is trading in a tight zone, and if you zoom in the hour chart, there is a slight divergence in price with the RSI. So the RSI is getting higher with the price going lower here, and the double bottom with a stronger RSI. And the MACD is also coming up at this moment. So in a technical standpoint, this double bottom seems to be holding up quite well, and we should see a rebound soon. And let's take a look at the macro. So one of the good macro data to look at is the bond yield. If you have been following my video, you know I have provided update on bond yield from time to time. And currently we're sitting at a long-term resistance line, which started back in the 80s. And every time when it touches the line, it will have a little bit of pullback. And during the pullback of the bond yield, it usually benefits the tech stock. Although sometimes they go up and down together, but mostly when the bond yield comes down, it will benefit the tech stock. And every single time when it touches the resistance line, the RSI will be right at the top. And this time when it touches the trend line, the RSI is overextend. And in my video, I was giving a target price of 2.8 to 2.9%, which we are currently at there right now. So currently we're seeing a divergence between the bond yield going up and the RSI that's coming down. And especially the recent double top, the RSI drops quite a bit. So next week on bond yield, we might see the bond yield pushing a little bit up higher. But ultimately, with the RSI coming down, it is due to a pullback, and I'm expecting it will come down to maybe 2.5% or 2.6% level. So in the short term, that will benefit the tech stock, and along with the strong double bottoms that is showing in NASDAQ. So I'll expect it will make some sort of rally next week. And since we just had the CPI data, which again, I've talked about it in my previous video that I was expecting it to be higher than the previous month. And the next event that will trigger a bear market would be the FOMC meeting at the beginning of May. So next week, we might see a little bit of rally for NASDAQ, maybe hitting back this resistance at 14.3K or possibly going up on the top resistance. But I don't think it'll get anywhere past this one. And we'll most likely see NASDAQ coming back down before the FOMC meeting or after the FOMC meeting. But in the short term, with the bond yield falling and the technical on NASDAQ that seems to have a rebound. So with the macro data, I think it will have a high chance of breaking out. Okay, so now strategy for play. So usually some people might want to have a more clear breakout signal before entering. So depending on how you draw this line, whether touching the top of the wick or if it's touching the top of the candle body, we are looking at the breakout to be around 2.4 bucks. But if it consolidates for a few more days, then the entry price will be lower, but the lowest will be around 213. So let's say entry will be 213 to 214, and the target price, as discussed, will be 4.7 to 5 bucks. And if you're looking for a cut loss, I will set it maybe at the bottom of this candle body or the bottom of the wick. So the cut loss will be around 2 to 2.1 bucks. So if you do not want to cut loss and you are looking for an average down, as mentioned, 1.8 will have a better support zone. So maybe you were adding at 1.8 and then at any kind of technical rebound from 1.8 to back to this resistance line, which is 2 bucks, you will most likely to be break even. So you can either to sell out completely and walk away with break even, or you can sell half of it. So you are lowering your buy price. So strategy for average down would be buying at 1.8 and then trim the position at around 2 to 2.1 bucks. And a quick look at the short data. So this is from iBull Desk. And this is the data just from Interactive Broker. So out of 8 million shares that are available to short, currently there are only 800,000 left. So from Interactive Broker alone, there is a 90% share that is being borrowed at the moment, and the fee is at 54%. It's not very, very high, but it's higher than most of the short interest fee. So if I have short MULN right now, I would return my short at a support line, so which is around 1.8. So that is why I said there is a possible technical rebound from 1.8 back to 2 bucks. And after it hit the resistance line, I think it will most likely to go down further. Just because the whole macro sentiment, there isn't really any good data or any good news that will support another market rally just yet. And in my recent video, I put out data on when I think the earliest bull run will be. So if you're interested, you can check this one out. So this is it for this video. If you liked the video, remember to subscribe and give me a thumbs up. And I'll see you guys next time.